to the moon. Let me play among the stars. Welcome, everybody, to episode 2 of Confessions of a Market Maker. I'm your host, Ray, aka All Day Ray, aka the Wallaby Kingpin. And I'm here with, our special guest, our reoccurring guest, the self-proclaimed director of Dirty Tricks. If you ask in Vancouver, he's going to be known as the Gorilla of House Street. He's been taking yours and my money the past 25 years to fuel his love of lavish cars. Of course, I'm talking about Mr. VWAP trader himself, JJ. JJ, how's it going?
Good, Ray. How are you doing?
I'm doing good. I'm happy to be doing another one. First one was fun, and let's keep this going.
Sounds good. Sounds good. Yeah, it was. I had really enjoyed the first one, and we'll keep it going, and let's see if we can entertain and educate some of these people.
Absolutely, absolutely. So today we're going to be talking about order flow, something which is which a lot of people don't know about. We M Trinity Media ran a Twitter poll, so we get a little bit an idea people's knowledge, and I think it came back somewhere around 70% don't know about order flow, and it was somewhere around there, right?
Yeah, something like that. It was a high number, and I'm the more and more I get into retail trading, the more and more I'm shocked about what people don't know, and what I assume people know, and they don't. So it's I'm glad that we can hopefully fill in the blanks, as they say.
Yeah, no, absolutely, absolutely. And so I guess we'll just get right into it. Order flow, JJ, or do you want to start with that? Do you want to explain about a market first? How do you want to?
Well, I saw one of the questions was, would you say that order flow is defined as all this stuff? And I've noticed that people are really hung up on terms and marketing terms. And, and I know I'm not offending anybody who's selling order flow products. God bless. But the thing is, I have a fundamental I'm shocked fundamentally at how many people don't understand what a market is, right? And if they understood what a market is, they would understand what order flow is, because a market is just a place where buyers and sellers meet to conduct trade, right? Those trades are orders. So we have buy orders flowing into the market and sell orders flowing into the market. That's order flow. That's it. End of story, right?
Mm-hmm.
Now, so what people are trying to figure out is, if I watch these orders coming in and out of the market, will I be able to tell where price is going to go, right? And that is, a wonderful way to sell a product, or to get people excited about something. But really, it's like saying, okay, I'm a doctor, but I need a patient, right? So it's just an integral part of the, that's what a market is, right?
Mm-hmm.
It's orders flowing in and out.
Yeah.
And so I really don't want to overcomplicate it. And it's just, we're trying to establish two-sided trade. Buyers meet sellers, they transact, that price is recorded by the exchange, right? Or the place that you're doing business at. And that's a print, right?
Yeah.
And that's all it is. That's
Yeah.
all it is.
Yeah. No, that's a yeah. I mean, I think some of the best things are, if we simplify things, to refine a strategy, or just to understand things. I think you put that excellently. Um, so JJ, with order flow being, why is it so important to you? Why should it be important to the listeners when developing their strategies?
Okay, it's important because it's the process of how transactions occur. Okay, it's like you're a mechanic and you're taking an engine and putting it onto a transmission. Those are the two parts of the drivetrain that move the car forward. So order flow, the selling and buying, that moves the market up and down. And so the way I was taught in retail trading by Shadow Trader and Peter Resnicek and Jim Dalton was, don't get hung up on all these little, sort of all the minutia. right?
Mhm.
Look and see where the orders are flowing and how they're transacting. And the nature of those transactions will tell you what kind of participants are in a market, whether the
Mhm.
market is a trending market or a balanced market. It will tell you the structure of the structure of the market, and we'll get into the profile charts that I learned from.
Yeah.
And what they do is, we're trying to what I'm trying to teach people is look at the structure of the market, and if you understand the structure of the market, you'll be able to take a lot of the stress out of trying to figure out entries and exits. And I'm not going to knock anybody's method of trading, but there are a lot of there's a huge faction of people out there that overcomplicate this so
Yeah.
much. And because the market moves fairly quickly, not today was like molasses, but because the market moves fairly quickly, trying to apply 20 or 30 different things to watching something to determine an outcome can be a bit overwhelming, you know.
Right, right. Let me ask you something, JJ. You said people overcomplicate it, correct? And
Yes.
me trying to relate my experience like from poker is like I think there's times in the past where I've even like complicated my own strategy to the negative. It's overcomplicating things. I think could have like the disastrous effects.
Oh,
Um,
definitely.
so relating to order flow, you say people overcomplicate it. How are they? How is it being overcomplicated?
Well, a lot of people, and I've been, look, when I started futures trading, I chased every holy grail. So I'm no better than anybody else. Okay. Even though I have a lot of institutional experience, like I said on the weekend, I put out a tweet saying institutional trading is like driving a semi tractor down the highway, right? Or the
Yeah,
freeway.
yeah,
And being a retail trader is, you're walking on the freeway, trying to cross it and not get hit by one of these semis, right?
yeah.
So it's a completely different thing. And I fell into the trap that every retail trader does. So don't feel bad, folks, if you've spent money for an indicator that doesn't work or you haven't figured out a certain thing. Because I went through 2 years of, and I was lucky because I found Shadow Trader really quickly, and that was just luck, right? I was looking at all sorts of things, and you pull up a technical, the indicators on Thinkorswim or any of those platforms, and there's hundreds of these things, right? Um,
Yeah.
and
Would
to
you
learn.
say you say sorry, not to interrupt you,
No,
just
go ahead.
the indicators real quick, like would you say most of them are pointless or like garbage or
No. I listen. I can't say that because I honestly don't know enough about them. Right.
yeah.
One indicator, relative strength. I have had experience with when I was a manipulator. People will think that a stock, if it's at 90 RSI, is overbought and you should short it. Well, I once held a stock at 90 RSI for 3 months. Right. And good luck to everybody who shorted it at $30 because I took it to 300. Right.
Yeah.
So, I had a client, one of the clients, we used to call him the tailor. The guy did a deal where he kept the stock going for 2 years without a negative day, right? It actually got written up. I mean, he's a freak of nature.
That's sick,
So, oh my God, yeah. I mean, go ahead, try and short it, right? But
yeah.
so
Yeah,
we,
for 2 years.
we dare you to. Actually, we want you to short it so we can
Yeah.
buy you in later,
Right,
right?
right.
Because your short position is going to help me hold up the price, you
Yeah.
know. So
I
um, so that was the one indicator that I had experience with. I knew it was bunk for me, unless you're trading like a real market. Maybe RSI will work if you're trading like normal real companies that aren't completely manipulated, right?
yeah.
But honestly, like Fibonacci's and all that stuff, and I know people, and I know they work because a lot of the guys I know use them, and they're consistently profitable traders. So I can't knock any of that. I
Yeah.
just don't know enough about it because I'd start on one and then I'd be like, oh, Fibonacci. And then I'd go, oh, this one. And then, oh, that one. And then, so I
It's almost
completely,
like overcomplicating
yeah,
things
I was like
too much.
chasing my tail.
Yeah. Yeah. Absolutely. It's better to like hone in on like one or two things and
Yeah,
strategy.
definitely. And because I trade the ES and I only trade the ES, I mean, I do consult with clients on block trades and things like that. But for the ES, I like trading it because it's a nice technical market, and you can see the structure using market profile in the TPO charts, and it just lowers my blood pressure. Because
Yeah, that's
um,
important. Yeah.
I have a friend who's a scalper, and he does 200 trades a day, but at the end of the day, he has to go lie down on the couch because his heart rate's off the wall, and he just wears himself out. You know,
Yeah, that's not good.
um,
That's
and
not.
you
We're
know,
not recommending that to the
no,
everyone out there. We're
and
not.
some guys are really good at it. Like these young guys. Like if you're 22 years old and you've got the heart of a lion, you know, God bless, go do it.
Yeah, I mean, he's not
Um,
when he hits 26, it's not going to be a heart of a lion, but
well, yeah,
but no, I mean that's a whole nother topic. Like me, like I think and not to divulge off the topic, you gotta keep yourself healthy at the same time. If it's bringing you too much, stress, I don't know, like I don't think it's worth it. Maybe
well, exactly.
refine what you're doing.
No, I completely agree. When I started retail trading, and I'm a guy who's used to trading heavy order flow for my clients, but that's what we call OPM, other people's money. When you have your own little retail account and you're sitting in a room all by yourself and you don't have, a trade desk, um, you know, I would take a trade, and this was after my heart surgery. I'd take a trade, and all of a sudden my heart rate would go up, and I'd start getting heart palpitations, right? And even if I was like right in the trade, I didn't have to be wrong. Even if I was correct and I made money on the trade, it kind of took a lot out of me, and I was like, okay, something's wrong. And what is wrong is I didn't know what I was doing, right?
Hmm.
So, and that's my body telling me, hey, look, you don't know what you're doing.
Yeah, yeah,
Go learn, otherwise your heart's going to explode again.
yeah.
So that's why I'm so thankful to Peter at Shadow Trader, because he dropped my blood pressure like 40 points as soon as I saw this stuff, and I was like, oh,
Excellent. Yeah,
you
shout
know,
out to Peter from Shadow Trader. You know, thanks for our man's health.
oh yeah, he's keeping me alive. He's better than any blood pressure medication that those boys over there.
Yeah, right. Excellent, excellent. All right, JJ, so I finally understand now. Like, since we've been in contact, I see you like post these like graphs on Twitter, like, and I would have no idea what it is, to be honest. Now I finally know this is a what you call a TPO chart or graph,
Exactly.
time price opportunity. That's what TPO stands for people listening. So one, explain a little bit about the graph, how you go about reading it. Is it hard to read, etc.
Well, at first when I first saw these things, I was like, what is this, alien hieroglyphics?
Yeah.
And like in these letters, there's, so I looked at it, and I started reading. And then once I got to, Mr. Dalton, you find out that it's basically a bell curve flipped on its side. And what it does is it shows you where prices transact, and it also show you where they transact for the longest period of time. And you bring in time into the picture, and price over time is value, right? Which Mr. Dalton teaches.
Hmm.
And once you understand the concept of value, and then you'll know when price trades away from value, how likely is it to come back to value, or is it breaking away clean away from an old value? Like say iPods are $10 and everyone's paying 10, and the demand goes up, and then they're trading at 15, or selling at $15. Are they going to come back to 10, or are people just going to keep coming for them? So the whole supply and demand thing is quite fascinating. And those charts, every letter is a half-hour period, and that half-hour period will show you every time there's a transaction, a letter will be marked on the chart. So unlike now, once again, I'm going to get a lot of hate mail, but the guys who watch the DOM and the time and sales, if you can watch it and you can make sense of it and trade off of it, God bless. But it moves too fast for me, and there's a lot of monkey business that goes on in it. And I
You
mean, I'll look at it, right?
you you said trade the what? I'm sorry. What did you say?
The
The Dom.
DOM, the depth of market, which is like the level 2 for futures, right?
Okay.
It's all it is an order book, right? The level 2, the depth of market, it's just showing where all the orders are coming in, the buys and the sells, and where they're matching up. right?
Yeah.
But that can be manipulated, right? When I was a trader and I wanted to flush somebody out of a stock, I would make the appearance that there was a huge seller in the stock, and people would run screaming for the exit. And conversely, if I was, trying to sell something, I would push the price up by using big fake buy orders.
Mhm.
So, but what these TPO charts do is they actually print what has transacted, right?
Right.
And when you see what is actually transacted, you can see the nature of those transactions, who is transacting, and the manner in which they're transacting. Are they transacting, like today, they were transacting at the same price for 12 half-hour periods, right?
Mhm.
So that told me that, that acted like an anchor, right? That's where the point of control, or where 70% of the time was spent in the day. And so if people are comfortable buying and selling, going back and forth there, if we move away from that, the odds are like more. We have higher odds that they're going to come back to that, right?
Right.
Unless there's a change of information that the market is usually waiting for, and that will push us far away from value as a trend develops, or a gap, which is a change of thinking. So all these tiny little things, and the the profile charts will show a structure. Some of them look like P's, and that indicates short covering. B profile shapes indicate long liquidation. So you can really, really tell a lot about the structure of the market, for me, it really helps sort of take the stress out of it, because I can take a structural trade, place a structural stop, and then let that trade play out and monitor for continuation. And I'm taking a lot higher odds trades, and I'm not. And another thing it's doing is it's keeping me out of the chop,
Mhm.
because a lot of times the market will open up and it'll just chop around, and it's just all they're doing is they're stealing your wallet. You buy, we pull the bids, you sell it back cheaper. You sell, we move the bids up, you have to force the coverage at higher prices, right?
Yeah.
So I call that a pickpocket market, and you can see that very, very clearly on a TPO profile chart. And when that happens, you just sit back and drink your coffee, read a book, put on some music, or go for a walk or something.
Yeah, yeah,
Um,
discipline. Have a discipline.
you know,
Let me
they,
ask you, because you mentioned level two, and like I was planning to ask you
sure.
how this works in conjuncture with level two. Now I know you mentioned that you can be manipulated with level two, and I'm sure like that's what you did. You manipulated people with the level two. Now, so does order flow? If you're using a TPO graph, does that kind of make level two obsolete? And like, hey, I'm not looking at level two, or do you use it in conjunction with level two? Like,
No, 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 no. See, the thing is, level two is for equities,
mhm.
right? For stocks. The depth of market is for futures. So you can use these TPO charts for equities. There's a lot of guys who actually do it.
uh,
Um, I haven't started doing that yet, because I'm not really trading a lot of stocks now, unless one of my clients wants to buy a block, and we'll accumulate something for him in one of his accounts. But because I trade futures, because it's for me, it's not the easiest market. It's the least complicated. You don't have to borrow stock. You don't have to worry about being bought in. It's liquid. It's thick. You can, even if you're trading 50, 100 contracts, you're in and out. I mean, there's liquidity. It's just a beautiful thing, you
mhm.
know. Um, and so the level two is for over the counter NASDAQ pink sheet stocks,
Okay, yeah.
right? It's an order book. They have the New York order book too, but in the old days, you'd have a stock, and you'd have 30 or 40 or even 50, 100 market makers in that stock, all competing for order flow from brokerage houses, right? And that's how they'd make money, right? Now, so much there's ECNs, which and algorithms, and it's all much more electronic. But what I used to do is I used to trade an under $20 market in Nasdaq, and what we used to call bulletin board stocks in the old days. And my job was to manipulate that level two. I owned that level two. I had basically I had my hand around the throat of the level two. Every single market maker had an order from me. I had market makers out there as kind of lookouts, like like recon, and I'd stick a market maker up on the bid, and he would tell me where the selling's coming from and how much the size of the selling was coming from.
Hmm.
Um, I'd have one of my guys on the offer, and he would show me bids when people came in to buy. He'd say, he'd call me and look, I can pay the bid for 100,000 shares, that kind of thing. So my level two was extremely manipulated, and that's why we call it making a market, because markets just don't spontaneously erupt out of nowhere. They're made by
Yeah.
people in order to sell something into.
Yeah, it's crazy. It's crazy. Like the whole like manipulation like aspect behind like the just in general with the level two, um, to me is just it's so fascinating. Like that, well, one that people are just totally unaware of this, and it's like it almost to me it seems like it's like the casino, casino versus the guy coming in who's playing like roulette.
Oh yeah,
But like,
definitely.
it seems like even worse, like worse odds for retail traders than that. Like with all, I'm serious, like.
Not if there are a lot of. I mean, I'm not knocking anybody who trades off a level two. There's a lot of smart people out there. One thing about the financial world is it brings some of the smartest people out, and I've met people who are like scary smart, and and they can trade off of it, and they'll know who's manipulating. They'll know that they see a big bid. Oh, they're shorting off that bid, so I'm gonna I'll short with them, right?
Mhm.
um, or that sort of thing. And but for the general public, a lot of this order flow, level two, tape reading, all of that stuff, it's really, really, it moves very, very fast. And if you don't have a fundamental understanding of how the business transact, I always say it's like trying to be a brain surgeon without knowing basic anatomy. It's like, oh, we'll just cut here and hope this works.
Yeah.
Um,
Yeah.
and I'm just blown away, because you got to look at your trading account like a child, right? Would you take a baby and put it on the freeway?
Yeah.
And to go ahead, like they say in New York, go ahead, and try and cross the road. No, you're not going to do that, and you have to look at your account like a little child when you're starting out in this business, because
Yeah, absolutely.
as soon as people think they know what they're doing or that they're smarter than the market, that's when we got
You gotta stay humble. You gotta,
you. Yeah.
yeah. No, no. Like I mean, and that's how I treat poker. Like it's really been a like I don't want to say like mantra of mine, but like almost like it, our ethos, whatever you want to call it, is like if I still got money, like I'm in the game. I still got a bankroll. I'm in the game. You just always
Oh
want to
yeah.
be in the game. Just be in the game. Like it's like almost like survival. Like
Oh yeah. There's a floor trader, ex floor trader on Twitter. His name's Pax, and he's always like, you know what? Keep your gunpowder dry, right?
mhm.
Because when it comes, you want to have your gunpowder dry and ready, right? Don't go running around in the rain with it. Uh, that's the hardest thing I found as a retail trader, is like when to just like not engage, right?
Mhm. Exactly.
um, and that's a very, very difficult thing, and people always come, and once again, I'm talking like like a kindergarten teacher, but a lot of people don't know this when they're getting in the market. They think, I talk to a lot of retail traders, and they think the stock market is basically like a bank machine with a computer mouse hooked up to it, and you click it and it spits out money. And I'm like, that's not how it works. When you take a long position, when you buy something, you're hoping somebody comes along behind you who's willing to pay more for it.
Right.
And the same with a short position. You sell something at a certain price, you think, that, people are going to push that price down and you'll be able to buy it back cheaper. So those fundamental concepts, if you think like that, there's a very, very astute gentleman by the name of Mark Douglas, and he was one of the most amazing. If you watch his videos on YouTube, they're just beautiful videos, because he was on the floor and he taught psychology to a lot of these traders, and he puts things in such a simple way, and explains it to people that it just sinks in very, very nicely. And he's written quite a few good books too, so I definitely recommend looking his stuff up.
Absolutely. Very, very important psychology. And I'm looking forward to, I'm sure we'll do a podcast on psychology itself. It's a favorite subject of mine. And I think it's just vastly underrated to success. Like you could be the smartest, most, all the strategies, the techniques, you honed it. But if you don't have the psychology,
Oh
the
yeah.
people, aspect behind it, you're screwed. Like there's no chance of success, I believe.
Oh,
But
I completely agree. And then there's another floor trader on Twitter, and he always talks about execution. And that was the thing for me. Once I learned these TPO charts, I could call the bottom. I know the target. I know exactly where we're going. But execute, take the trade, monitor the trade, and then manage that trade properly. Those are skills that I'm still learning to
right,
this day.
yeah,
And we've got a guy. One of my best friends is we call him Odds, the Odd Fellow, and he is a like one of the most disciplined structural traders I've ever met. Like he'll just sit there and just relax, and he'll just be go. People will be, should I short? Should I jump in? And he's like, no trade yet, no trade yet.
hmm
You know, and
yeah,
he'll just kind of chill out, and then next thing you know, he'll see his opportunity and he'll be like, I'm long, and then he'll just sit and wait on that trade, sometimes for an hour, 2 hours,
hmm
and without worrying about it because he knows that the structure is backing up um, his call, and that the odds are in favor of that trade working out because the profile is speaking to him. Right. We always say profile. She's a cruel mistress. You cannot get anything past her. She sees everything.
Mm-hmm.
So
Yeah, all right, I like it. JJ, when you were on House Street, right, where like the TPO, right, where you weren't using it, is this something that you just, as a retail trader have
yeah,
learned? Yeah.
absolutely. I never even heard of this. If you had showed us, because we were arrogant and we were young and we were like knuckleheads. If you had showed us this, in 1995, we would have laughed at you, right?
Uh-huh.
And some of the traders might have actually pantsed you, but you know, like
Yeah.
they would have, like you didn't even know what it was. But then once you get a little bit more mature and you age, and then once you lose some money retail trading, you start looking, and then you sit and you listen to Jim Dalton, and my God, that man has forgotten more about the market than I'll ever learn. And it's just fascinating the insight that he can pull from these structures, and I'd never seen it, because you got to remember
You,
my. Go
you
ahead.
learned it from him?
Well,
From
I started with Shadow Trader, and then Shadow Trader. They are students of Dalton, Mr. Dalton, and
Okay.
so like all roads lead to him. He's like Moses. He went and got the tablets and brought them down from the mountain.
Okay.
A gentleman by the name of Peter Stadelmeyer apparently invented it, and Mr. Dalton financed his first book, and because they were on the floor of the exchange together, and so he is our, he's sort of our messiah who helps us see things.
The Messiah of order flow.
Oh my God! Yeah, I mean, you just I cannot. The man is just like he just sees things and he has order flow in his veins because he was on the floor of the Chicago Merc. So those guys, you know, it's funny. They probably laugh like the old bond traders at Salomon Brothers at the new recruits. They probably just sit there and laugh and smoke their cigars
Hmm.
when people talk about order flow because they're just like order. It's funny.
Yeah, for sure. So how was the learning order flow like in learning how to read the graph, the TPO? How,
Um,
how was the learning curve?
it takes a little while. It takes a little while. Mr. Dalton says it's like backing a car out of the garage. The first time you do it, you're nervous and you're looking at a whole bunch of different things. And then, after a little while, you just throw it in reverse and out you go. And he calls that chunking different parts of information together. And that was the hardest thing because I'd learn one thing and then I'd focus too much on it and miss a whole bunch of other stuff. And Peter Resnicek always talks about in context. What is happening in the context of a trend or balance or inventory. Inventory is another thing a lot of people never even heard of, and you'll see inventory come into play when price can't get over a certain level and the people who are long, there's nobody coming behind them to bid, the instrument up so they can sell into it at a profit. So they start dumping, right? Because
Mhm.
inventory got too long and it needs to correct. So things like that, and you can see that on these charts. And I sound like, a religious fanatic when it comes to these things, but for me, it's like you take the blindfold off, and it's completely different than what I used to do because on House Street, I My job was to use whatever dirty trick I could to liquidate the most amount of stock at the highest prices for my fiendish clients.
Mhm.
So it was a completely different, sort of way of looking at things. So it must be interesting for you coming from the poker sort of standpoint, kind of looking at the comparisons of, markets and I guess game theory.
Yeah, no, absolutely. Yeah, game theory. You just nailed it on the head. Like that's I like my whole like strategic approach to poker is like rooted in game theory. That's really like all I study is game theory and
Okay.
surrounding poker. And so, yeah, I mean, I think really anything involving strategy, like fascinates me. I guess it's just one of my natural inclinations. I think you would say.
Hmm.
And yeah, so like hearing these stories from you, um, it really puts into perspective for me. Like I didn't realize how much of a disadvantage retail traders are at, and like learning even more from you, I'm like, oh my god, like this is ridiculous. Like there's a lot stacked up against people, and I think what's good about me and you doing this, getting this out, because I think a lot of this knowledge is not out. Is that like okay, now people going into this know what they're up against, and like
Oh yeah,
I think the
yeah.
lessons. And you can correct me if I'm wrong. I think the lessons people need to take away from this is like listen, like you need to do your due diligence. You need to come prepared. Like this is no joke. Like the odds stacked up against you are
Oh yeah,
are tough. And I'm just viewing this as somebody who is a like I guess you could call me a gambler. I don't really like calling it as a like I have
yeah,
a strategy and but there's a luck. There's luck. There's
yeah.
whatever you want to call it. But like looking at this, I'm like, oh wow, like this is like this is tough. It's a tough feat to be
Oh,
successful in, and people just gotta
this
you gotta
this definitely,
yeah.
yeah. This and I keep saying that this is the hardest thing I've ever done. It's just because you're battling your head. If you've had a bad day, if and a lot of people, since the days of Jesse Livermore will think, oh, okay, I'm going to go to the market because I want a new car and it's going to pay for it. And oh boy, that's when we really kick you in the teeth, you know, because, and a lot of people, they don't want to learn, they don't know that it's essential to learn how to trade well
Mhm.
before trying to make money. They jump into it going, I need to make this amount, I need to make that amount, and that desperation. And I'm not saying that I'm not guilty of it. I've made every single mistake that every retail trader has gone through, so I am no better than anybody else.
Mhm.
And I've done some pretty stupid things. Luckily I'm cheap, so I haven't lost a lot of money. But you know you look at these things and you just got to know what you're doing, right? You have to know that you are entering into a universe that caters, that is run by some of the smartest people you will ever meet. You have people who turn down jobs in um, aerospace and physics, and they go into the market, and they're like these guys who work at quant funds and things like that. These guys are like Mensa level smart, and they're trading with trillions of dollars of money, and you're going against them with an account with say 20 grand in it, right?
Mhm.
So you're literally showing up to a gun battle with like a little Swiss Army knife, right?
Yeah.
So take the time to learn the market, you know, and for young traders, the best thing is to learn on the micro E mini or the micro ES, we call it. It's because you have a bad day on that, you lose $50. You can use volume profile to learn structure and how to take good trades and manage those trades, and it really will help you learn uh, how to watch price action, and how to be aware of what's going on, and why you should be making certain decisions.
Yeah, absolutely. I think yeah, and that's another topic I can't wait to talk to you about, like to do an episode on that, because I'm very eager about learning more about that, and that's something I wasn't even aware of until speaking with you. Um, so that's good. So JJ, so as far as order flow goes, so for people who are trying to learn this, well, hold on. Let me start with this. How vital is would you say learning order flow, learning how to read, like read the graphs, the charts, the TPO? How
For
bad
me
would you say?
now, like I'm talking about myself, right?
Mhm.
And you know, I need to learn the nuances and the structure of the market and what it's telling me. We call it market generated information. The market generates information, right? The order flow comes into the market, it transacts, and those transactions are what we call market generated information. So we need to learn how to interpret that, right? And
Mhm.
that's for me. Now, a lot of people will be able to trade off a footprint chart, right, which shows what's transacting on the bid and the offer. A lot of people won't even look at that; they can trade right off the depth of market, right? I don't know how they do it, right?
Mhm.
And for myself, for you got to trade your personality, your risk, what your goals are, and if you can do it, and if you can get in and do 50 trades a day and scalp and make, a couple of grand doing that, with some size here and there, good for you. You know, I applaud that, right? I'm actually, I'm not jealous, but I'm in awe of that because you have the mental and physical stamina to be in and out and in and out of a market a lot, right?
Mhm. Right.
Um, and I think that's, admirable if you can actually do it. Um, but for me, I need to trade structure because I'm an old guy and, I need to lower my stress. And, I mean, I'm not saying it takes completely all of the stress out because, you are going to make mistakes. And, that's why, you use a stop and you just get out and wait till the next trade because the next bus is coming.
Yeah. Yeah. Absolutely.
Um,
I think you touched on like a good point, like that, for you, like, hey, like this is really important for me and for my strategy, and you listed the reasons why. And
yeah.
like, I think, sometimes when like we're learning like new things, like it's like, you might not know at first, right, about the subject,
Oh
and
yeah.
you're following this guy, you're following that guy, but then also at the end of the day, you have to find what's right for you as well. And so it can get tricky as far
Oh
as,
yeah.
you know what I'm saying? And
Definitely.
but I think that's what people need to be aware of too. It's like, okay, when you're learning stuff, okay, learn from him, learn from them, but also take it with a grain of salt and then incorporate it with your personality, what your goals are,
Yeah.
etc. Does that make sense?
Exactly.
Yeah,
Oh, definitely.
yeah,
Definitely. There are a lot of people I see on Twitter and they follow and they get attached to a certain person and their levels.
yeah,
And that's great. If you can trade off their levels, that's great. Once again, I never poo poo anybody's method of trading, right? Because it's what works for them. But I always tell people, why don't you get your own levels and learn it yourself? Because what if this guy gets hit by a bus and he doesn't publish his level the next morning? What are you going to do?
yeah, yeah.
You know?
It is screwed. Yeah,
So that's just one thing that I like to talk about and just always, that's why I like to do my own homework because otherwise if I follow somebody, first of all, you have no idea what their method of trading or risk or position sizing, any of that, right? Because they're just putting a number on a out on your screen. So but then again, if you can trade that way and make money consistently using somebody's level, go for it. You know, if you're making money and you're profitable and you're consistent, you know, you don't need to listen to me at all, right? I should be listening to you,
yeah,
right? So, but I'm on this journey myself, and I find it fascinating, and I really like talking to retail traders because there's some really smart people out there.
hmm
You got guys like yourself, like you have who are professional poker players.
hmm
You've got guys who are ex-engineers. You have people who they come from all walks of life, so it's really fascinating to see how other people see the market and how they interpret price action and things like that. I always find that fascinating.
yeah, yeah. No, no, it absolutely is. Yeah, so JJ, so for people who want to learn order flow, right? What would be your suggestions as far as how to go about learning this topic, learning how to read order flow, the TPO graph, etc. Or
I would start with Shadow Trader and Jim Dalton, and I always sound like I'm a paid shill for those guys, but
yeah,
I'm not.
I'm not,
It's
I'm
just because
not-
they are like as Peter says, he thinks VWAP traders is mom who's always saying nice things about him on Twitter. But I just cannot say how much Mr. Dalton has taught me about the dynamics, the structure, and how to see a market. Really, really, because once you learn how to see a market, you don't get excited by the up moves, and you don't get scared by the down moves, because you understand what leads up to them.
Yeah.
People will go, oh, it's because of this news or that news. It's like, no, sometimes the inventory just got too long and it needed to be cleaned out.
Hmm.
You know,
Right.
and it just so happens that a news event, because there's tons of them now, will coincide with that. And it'll just kind of be a catalyst to just kind of push the cart over the cliff.
Yeah.
You know, and then the market will balance itself and clean itself out, or do whatever it needs to do. I find that fascinating. Coming from House Street.
Coming from
um,
House Street.
you know,
So
because
yeah, yeah. Go ahead. Go
but like House Street, my clients ask me two questions at the end of the day. They'd call me up and go, okay, the deal, whatever deal that they were working on, that I had, 50 million shares. They'd say, what was the volume? And I'd say, oh, I traded 10 million shares. And how much did I sell? I sold 2 million. Phone clicks. That's it. Two questions. What was the volume? How much did I sell? And in, 3 days, they ask for a wire. That's it.
So
Um,
it sounds like life was a lot simpler as a
oh,
huh?
yeah, it was. I mean, it's crazy because these guys, I mean, that's another different story, because you have, once again, people with different agendas, and different sets of morals and ethics. Once I had a client, he made $7 million in a week, but he stiffed the guy who was painting his fence $500. Oh yeah, these are the kind of specimens I had to deal with.
Yeah.
We had one promoter from the U.S. who loved Canada because he said, "Oh, I love Canada because they don't throw you in jail for bouncing checks." So, I mean, I'm telling you, I thought, like, when I was a bouncer, I thought there were some specimens that came through the nightclub. Boy, you're a trader in Vancouver in the '90s and the '80s, and that period of time. And
Mhm.
there were some characters that came through. Um, you had very, very intelligent, methodical, disciplined people, and there were the guys. Those were the guys who would pull 100, 200 million, $300 million out of a deal, because they'd take it and they'd work it for a year, 18 months, 2 years, and they'd build up a massive, massive market that they could sell. If you wanted to sell $100,000 worth of stock a day, you just sell it into it in the market, because you've created a nice liquid market. It'll absorb that. So I there were guys like that, and then of course we had the degenerates who did the 2 day pump and dumps. And so you got to see a very, very different side of how this industry works. And I suppose it's good, because I learned a lot about the dirty tricks that go on.
Yeah. Yeah. Absolutely. Yeah.
Yeah.
No. And now you can share them with us, and the rest of the public that have no idea what's going
Yeah, I
on.
know. Now I'm gonna have, like, it's gonna be bad now. All the order flow guys are gonna have hitmen after me. I'll have to wear a bulletproof vest, like a
Well, and
you
so
know
this is a good point now
you
to
know
bring to the audience why we don't do video, because we
Yeah, oh yeah, no, I mean, I there was a market maker, one of the market makers who the market maker who actually shorted all of Jordan Belford's deals at Stratton Oakmont. He actually wore a bulletproof vest every day to work.
wow, really,
Yeah.
wow,
Oh yeah. Yeah. He used to wear a bulletproof vest to work,
wow,
because he was all over the offer on everybody's deal, and people hated him.
yeah,
So, and he was one of the most feared short sellers, in that under $20 thing. He just knocked the heck out of stuff. So he had to wear a bulletproof vest to work it.
that's great. That's
Right.
yeah.
And
These stories are man. Just the characters. Like I think just the personality to
oh,
work on Wall Street, on House Street, wherever in that
well,
industry.
yeah. Well,
It's just fascinating to me. Like just it's just character after character. It seems like
I don't think I really dealt with a lot of normal people.
yeah,
Normal people go and get jobs, and they're accountants, and this industry really attracted a lot of really, like, very highly intelligent people, but they had to express themselves. Let's just say it that way. You know, you know, you know, you'd be at a stock presentation at an Italian restaurant, and the promoter would bring an alligator into the restaurant. I mean, that's Vancouver,
Yeah.
right?
Yeah.
Where the hell you got an alligator in Vancouver? I have no idea.
Yeah.
One of the promoters got nailed by the SEC, and he showed up at the in court wearing a pink suit, pink shirt, pink hat, and pink shoes.
Yeah.
It just guys like that were just they were all over the place when I started, and
Why
that
do you,
doesn't really
why
exist
do you,
anymore.
why do you think that is? Like what do you think it is that like attracts these types or
Well, they're kind of actually very creative people,
okay.
and they see that number one. I mean, of course, it's greed because you're getting when you have 5 million shares that you spent maybe $500 for or $5,000 for, and you're selling that 5 million shares into $1 or $2 volume. There's that's a big markup. I mean, a lot of these guys, they do a deal and they drag down 5 million in a week and they'd be gone. And that's just basically selling worthless paper. I mean, back in those days, and it would attract anywhere from like real people. Like I had some clients, like I have a client of mine that we're going to have on the show, and he actually was a venture capitalist, and he built markets and he built the company, and but he would take his stocks to $20-$30 a share, get them on NASDAQ. He would actually do the right thing and build them out, and he would make, enough money to choke a dinosaur. Um, but he deserved it because the guy works 20 hours a day and he's one of the most disciplined, intelligent, methodical men I've ever met in my life. And he taught me 90% of what I know. So we had guys like that who were but then we had what we call the rounders, or the paper hangers. And, that they were the guys who were flamboyant, and, they always had a different Rolls Royce, and they were the different woman, and, gold chains and, all that stuff. And that attracted that crowd because there was so much money flying around. And Vancouver was a very, very, it was a mining, we had a lot of mining. We had a mining exchange, Western Canada. So we had a lot of speculative money going through there. So it was
Okay.
a fascinating time.
Yeah, yeah. No, speaking to you a little bit off, recording. You've told me a few things about Vancouver. Tell me a little bit about Vancouver in the '90s.
Okay, well, we used to have one game, where a promoter will always ask you to go to dinner to pitch his deal. And one thing the promoters would do is, they take you to an expensive restaurant. They just go say, okay, eat what you want, drink what you want. I'm buying, right? They'd take like 5-10 people out, really expensive places, and, the bill would be, two, three, sometimes $5,000, because whatever these guys are drinking and eating. And the funny thing is, right before the bill would come, the promoter would go, I got to go to the bathroom. He'd get up and leave and disappear. So, and he'd stick everybody with the bill. So I had a client called the Penguin, and we learned how to recognize this. So what we would do, our game was to get out of the restaurant before the promoter skipped out.
Okay, all right.
So that was, things like that.
Yeah.
It was
Wow.
that was a very common thing. Because he'd look at me and I'd look at him, and we'd go, "Yep, he's going to do it. He's going to bail on the bill."
So you got to bail before he bails. That's funny.
Oh yeah. That was we did that so many times, and because that was a weird thing, and I've never experienced that before. But
I mean,
that was a thing in Vancouver.
Yeah, I mean, it seems like just terrible etiquette. I mean, I feel like that's like.
Oh yeah.
I feel like people get hurt for that type of stuff. You know what I mean?
Oh, I know. I mean, people in New York, they call them savages. People who do stuff like that.
Absolutely. Yeah.
But in Vancouver, people would get away with ridiculous, sorts of scams. Forbes magazine called it the scam capital of the world once.
Really?
Oh yeah, you have no idea what kind of shenanigans are going on. It's a Pacific Rim city, and every major sort of enterprise goes through there. And when the markets were open, they were moving money through the markets. And there's nothing a criminal would like better than to take 200 million shares of stock and sell it at $4 and walk away with a couple of $100 million net proceeds.
Yeah, absolutely.
It's not a bad month's work. And at the end of the bulletin board era, the penny stock era, some of these deals, they would be trading 150 million dollars worth of dollar volume every day. And so let's put it to you that way. When I look at a company that's trading under $20 or $10, I don't care what the price is. I'm looking at the dollar volume and the number of trades. If it's traded like 100 million shares of dollar volume, I'm like, ooh, somebody, somebody probably got off 20, $30 million worth of stock into this volume.
No.
Right? That's how I think.
Yeah, right.
Right. I look at the dollar volume. I don't look at that like when I'm looking at Apple or Facebook or, like normal, clean stuff.
Mm-hmm.
But when I'm looking at some of these promotions I see, or these, low float, these low float things that, oh, there's 1 million shares in the float. No, there's 70 million shares going through it today, and it's traded $300 million in dollar volume. I'm like, ooh, somebody rang the register for $100 million or $80 million, because that kind of liquidity, that kind of liquidity it's an aphrodisiac,
Yeah, absolutely. Yeah, no,
when you can.
crazy. That's crazy. I know, like, I've only heard good things about Vancouver. Like once online poker was maybe legal in the U.S. They call it like It's like our Black Friday here for like poker players. They called it Black Friday. A lot of poker players went to Vancouver, so because you can still play online poker in Canada, and like everyone had great things to say while living there, and there's still people that do live there. But,
It's a beautiful city.
mm-hmm.
I shouldn't say anything bad about it. It's a beautiful city. It's extremely expensive. It used to be, when I was working as a bouncer there in the 90s, when I first moved out after university, it was fun. I mean, we had a great time. And then working in the, in the industry there, I never laughed so much and made so much money. I mean, I have no regrets about that.
Mm-hmm.
But it's a beautiful place. It's just very, very expensive to live. And, and it rains, 300 days a year there. So,
Wow, that's really.
oh, I mean, it rains a lot. I mean, it's like London.
Yeah,
So my
like it's
buddies
like
from
Seattle. Like Seattle, it's close to Seattle.
yeah, it's 2 hours away from Seattle. I love Seattle. I used to go there every weekend. So
Yeah.
yeah, and I had some clients down there too. So it's yeah.
Nice, good deal, good deal. Well, I think we'll wrap this up shortly. Just to recap for people out there trying to learn about order flow. JJ, you're sending them to Jim Dalton and Shadow Trader. That's your recommended advice for people trying to learn.
Yeah, that's my recommended advice. If they need any sort of help, come to me and I'll tell you what to look at on Mr. Dalton's site or Peter's site. And if they need any sort of explanations, I'm on Twitter. I'm VWAP Trader One, so I welcome any kind of, if you guys need help, let me know. It's the least I can do for what I've done. This this whole program is about confessions, and and once I found out what retail traders go through,
Yeah,
and I was like, oh man, I feel bad. I gotta try and I don't know if it helps, but I gotta at least try.
oh, I get this. So this is kind of like you like repenting, like.
Oh yeah, this is all repentance. This
Oh,
is
got it
this is
now.
all.
Makes sense. This is starting to come together now. All right.
Yeah.
That's funny. So, yeah, JJ. Yeah, man, it's been good. You guys will put follow him VWAP Trader One. We'll put the links. I'll put mine in as well. Our Twitter handles. If anyone wants to reach out, talk to us for whatever reason, feel free to. JJ, it's been fun. Anything else you want to add?
No, I always say hi to my girl France. Was at mon âge, and that's about it. And yeah, no, I really enjoyed doing this, and hopefully I didn't. I was able to help a little bit, and if anybody needs help, please don't be afraid to ask.
Absolutely, absolutely. JJ, thanks again. Everyone, thanks for listening. And yeah, we're gonna continue to do this. We're having fun. And yeah, thanks everyone for tuning in. JJ, have a good one.
You too. Take care.
Bye bye.